Have we reached a turning point? I wonder. Canada's rental market has seen a shift recently. We've now seen the biggest drop in 3 years. That's certainly something we haven't heard for a while. According to the latest report from Urbanation and Rentals.ca, the average asking rent across all property types in Canada fell by 0.8% from May to June, and that brings the average rent now to $2,185. This is now the largest month-to-month decrease since early 2021, and this definitely bucks the usual trend of rents rising, especially at this time of year. For the past few months, rents have been nearly flat. They've increased only 0.2% across the nation between March and June. And this cooling trend is a stark contrast to the past few years where rents, of course, have skyrocketed. However, as is always the case, the situation varies across different cities, different provinces. And as an example, Toronto saw rents for condos and purpose-built rental apartments drop by 3% to now a 22-month low. The average rent there is $2,715. Meanwhile, in Vancouver, rents did decline by 8% year over year, but they still remain above $3,000 a month. So certainly not cheap there, but maybe they're moving in the right direction. On a provincial level, Ontario and Quebec saw rents decrease month to month, while British Columbia saw no change. And on the downside, there are some cities that are definitely going against the decline trend. The Prairies and Atlantic Canada saw pretty rapid rent increases. Edmonton led the rent growth amongst Canada's 6 largest cities for the 6th month now in a row. Rents rose by 14.3% to an average there of $1,564. The report also shows that Regina, Quebec City, and Saskatoon, they also reported significant annual rent increases. Those range from 17% up to 22%. There are some experts that are now predicting that the rapid rental growth may soon stabilize, and they're focusing particularly on the more expensive markets like Toronto and Vancouver. And they're saying that as renters get priced out of these cities, they then move to the more affordable areas like Alberta. This, of course, causes rent there to rise due to increased competition. So overall, there are some areas that are still facing rent increases. There are signs that the rental prices across Canada may be stabilizing, and we just might offer a glimmer of hope here for renters who are looking for some more affordable options. A recent survey put out by TransUnion shows that Canadians are continuing to feel financial squeeze more than ever. This survey, which was conducted in May of 2024, the survey found that 57% of households believe that their incomes aren't keeping up with inflation. And adding to the stress, 38% of people expect that their bills and loan payments are going to go up in the next 3 months. And this financial pressure, now it's pushing a lot of people to change their savings habits, with some boosting their emergency funds, using more credit, or even in some cases rethinking their retirement plans. That's a pretty significant impact that these feelings are having. Matthew Fabian, he heads the financial services research at TransUnion, and he says that things have gotten a bit tougher for a lot of people. And he says, as the high cost of living and high interest rates have continued, it's kind of eroded some of their disposable income over time. And I think it's starting to wear on them. The survey found that 46% of Canadians feel that their finances are worse than what they expected this year, and that is up from 42% of people who felt the same thing last year. And this is despite the fact that 80% of people are saying that their income has stayed the same or even increased recently. On top of that, 58% are not feeling hopeful about their financial situation for the next year, and nearly 2/3 think that Canada is either in a recession or will be in a recession soon. Inflation continues to be a major concern, despite the fact that it's come down a little bit. 86% of these respondents rank it amongst their top 3 financial worries. And on that note, Stats Canada recently reported that inflation has ticked up slightly to 2.9% in May. It was led by rising gasoline and grocery prices. Now, on the grocery thing, even though grocery inflation has slowed, prices are still 22.5% higher than they were 4 years ago. On this topic, Fabian points out the higher cost of those non-discretionary items creates a little bit more payment shock because it forces these consumers to make trade-off choices as to where their income is directed. The report also says that in the face of these financial pressures, 27% of Canadians are planning to apply for new credit or to refinance existing credit in the next year, which just shows a growing need for more flexible financial solutions. Looking for a balanced investment option that can help you grow your money and provide you with cash flow? Well, check out BMO Balanced ETF. This is a fund that invests in other BMO ETFs that cover global stocks and bonds. The BMO Balanced ETF adjusts its portfolio every 3 months to keep an optimal mix of assets, so you'll get exposure to a wide range of markets and sectors through low-cost index ETFs, and you're only going to pay one management fee. The BMO Balanced ETF, it's ideal for investors who want a mix of growth and cash flow with a professional touch, of course, from BMO Global Asset Management. Don't miss this opportunity to invest in a balanced fund that works for you. The BMO Balanced ETF, a smart way to help you diversify your portfolio. Visit BMOETFs.com today to find out more. Now, earnings season kicks off this week, and with so many stocks that are trading at high valuations, we're obviously going to be watching those very closely. The poll question in our Pulse newsletter this week is, will corporate earnings be able to sustain the stock market rally in 2024? Now, so far, the results are pretty neck and neck after 3 days of voting. Very, very slim lead at this point to the yes side. I am interested to know what you have to say. You can click on the QR code on this screen to voice your opinion. Also, did you know that you can listen to our YouTube videos and podcast forum? Click on this QR code here to subscribe with your favorite podcast provider. Down in Washington, Federal Reserve Chair Jerome Powell, he's testifying before the Senate Banking Committee today, and yesterday he testified as well. And he's giving an update on the U.S. economy and the Fed's plans as it pertains to that. A couple of things. Well, he's talked a lot, but he did mention that while inflation has dropped significantly from its peak a couple of years ago, the Fed still needs to see more improvement before they are going to consider lowering interest rates. And importantly, he made it clear that they will not cut the rates unless they're confident that inflation is moving steadily down towards their 2% goal. He says, we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Powell also pointed out that the recent inflation numbers have shown some progress, but he didn't provide any specific timeline for when the first rate cut might happen. That's something, of course, we'd all like to have some clue on. And this is a bit of a change from his previous comments where he was more optimistic about the timing. The Fed's interest rate has been now at a 23-year high, and you've got to go all the way back to February of 2001 since we last saw rates this high. And this is, of course, affecting borrowing costs throughout the economy. Like I mentioned, inflation has slowed down, but the Fed wants to see more solid proof before making any changes. Powell also talked about the job market. He says that although it looks strong, but he says it's not overheated. And he says that it is similar to the way he saw it before the pandemic. But recent data, it does show a slight increase in the unemployment rate in the U.S. We see more people filing for unemployment benefits, and this shows that the job market might be starting to cool off a little bit. He also acknowledged the tricky situation the Fed is in. If they cut rates too soon, then inflation, of course, might rise again. If they wait too long, the job market might weaken too much. So they really need to balance these things off quite carefully. On that note, he says, if we see the labor market were weakening unexpectedly, which is to say more than what we've seen in a material way unexpectedly, then we could also respond to that because we have a dual mandate and we now see the two mandates more in balance than they were a year ago. I got an email yesterday from Ticketmaster, as did many other Canadians, and the company's users across North America are pretty ticked off this morning after learning that their personal information may have been compromised in a security breach. Now, the breach occurred between April 2nd and May 18th, and Ticketmaster discovered this on May 23rd. They discovered that personal details like names, email addresses, phone numbers, and encrypted credit card information might have been accessed. But they waited until this week before they notified the potentially affected customers, and the delay has significantly triggered some customer backlash. Ticketmaster acknowledged the breach on their website. They said, "We know how important your personal information is, and we take its protection very seriously." Now, this breach has brought additional scrutiny to Ticketmaster and its parent company, Live Nation Entertainment, which is already under some fire for allegedly monopolizing the live events market. We've seen a lot of that coverage in the news recently. Cybersecurity expert Ross Saunders, he criticized the delay in notifying the customers, advising them to watch for signs of fraud or identity theft. He says, you may want to cancel your cards and get new credit cards issued if that information happens to be decrypted down the line. Now, in response to the breach, Ticketmaster, they are offering a 12-month free identity monitoring service through TransUnion of Canada. And that is nice, but as Saunders noted, and it's truly a fact here, the risk of this identity theft could extend well beyond a 1-year period. Now, he emphasized that while customers should take precautions, the responsibility for protecting personal data largely falls on the companies. Ticketmaster claims it is enhancing its security measures and cooperating with law enforcement and financial institutions to prevent further unauthorized activity. If you're not subscribed to our Pulse newsletter, I will make that very easy for you to do. I will add a link in the description of this video. I'm here Mondays, Wednesdays with this report. As always, thank you much for watching this video. We'll see you next time.